Hey everybody, it's MAPS coach Abe Shreve, and this week I want to share with you a little conversation around financial management. I just lost some of you. Some of you just mentally floated off to a different place. And you're probably the ones that need to tune in and listen up. Because if you own a business, this is the conversation that determines how much money you actually take home. It's not enough to just leave the cave every day, club the beast, and drag it back. We want to know, we've got to bring enough of the beast back so that we have enough to feed the family, right? So, it was a terrible analogy. I've kind of written things out in advance behind me on the board. I'm going to walk you through this conversation. I'm going to do that for a couple of reasons. Number one, there's some basic understanding that I think is really critical for us if we're going to work on finances together. And then number two, I want to do this in an organized way. With my broken wrist, you can actually follow along. So, in the Millionaire Real Estate Agent, there are 4 critical numbers when we're measuring the financial health of a company. There are 4. They appear right here. I call them the big 4. It's total income. We start with total income. Total. When you're looking at your profit and loss, I don't want you to extract any agent commissions out of your total income. Well, Abe, I only focus on what actually came to me. No, all of it. We need all the income. Some of the larger companies will have other businesses that add to that income. They've got a title company that they're a part owner in, or they got a transaction management service that actually adds to the income. I just want you to report your total income. The second is the cost of sales. Cost of sales are any expense that change or adjust dependent upon whether we make, how much we sell or how much we don't sell. That's it. These are variable expenses. So if I have a certain amount that I dog-eared to spend on photography, and that's home photography, and so if I list 5 houses, it's a certain figure, and if I list 3, it's a certain figure less, that's a variable expense. That's a cost of sale. And then of course there's operating expenses. Operating expenses are things that are absolutely fixed. Operating expenses are things like salaries and things like your lease. Just imagine going to your landlord and saying, hey, we missed our goal. Like we were 68% of our revenue goal for last month, so here's 68% of the lease. Which is, that would never be acceptable. These are fixed expenses. Now, the equation's simple. We take our cost of sales, and we take our operating expenses, we add those together, and we subtract those from the total income, and that gives us the net profit. Simple, right? I mean, if you need a very simple scan, a 10,000 foot view to determine are there red flags that I need to go look at, these are the 4 numbers that'll do that for you. Now in our company, we have models. And those models state, in the budget model, it states that 30% of your revenue should be spent on cost of sales, 30% should be spent on your operating expenses, and 40% on your net profit. Now things are a-changing. It's been a little while since Gary wrote The Millionaire Real Estate Agent, and so we're seeing some adjustment in that figure. That figure may go up and down depending on what role you play in the company. You may have an ISA division, which is inside sales associates that are helping with the lead generation portion of things. You may have implemented a showing assistant model and you're paying people to actually to show homes, and then your buyer agents are writing the contracts. You may be out of production. And all of those variables will determine what percentage of profit you're going to have. However, this is the basic model. Now, in the world of expense management, and in the world of just finances in general, this is a hard conversation for a lot of people. We build a lot of emotion and a lot of feeling around the story of money. Some people have gone through a very difficult experience where there was a period of their life where they did not have enough money and they had to make those very difficult decisions. If you've ever looked at the Maslow hierarchy of needs, you don't care how funny you are and how self-actualized or how self-fulfilled you are on a career level. If you don't have a place to eat, if you don't have food to eat and a place to sleep. So in terms of the Maslowian hierarchy, when we apply that to business, if you don't have enough money, enough revenue to pay your bills, you're going to feel some anxiety and some pain. Some people, they have a block around the conversation of money because it creates conflict in their relationship. We see a lot of that. It's no surprise that the number one area cited for marital discord in the United States today, the leading indicator of divorce, is financial stress. Because we speak completely different languages. So you take, and I'm speaking in glittering generalities here, you take a woman who on average speaks 22,000 words a day. Men speak 7. Women in our family, I'm the woman. I speak 22,000. Teresa speaks the 7. But nonetheless, you take that scenario and you look at what some of their most basic needs are. Women have a basic need. And again, this isn't generalities, but the basic need is safety and security. Men, it's respect. It's less respect me, yo, I'm the man. And it's more just, it's my job to get things done. And I have a basic need to be respected as a provider. So when you introduce the circumstance of difficult money management or difficult times money-wise, just take a young couple that's struggling financially. She doesn't feel safe and secure, so she feels fear. So she comes to talk to him. And he doesn't feel like he's earned respect, he's not providing, and he feels shame. And I would ask you, does a man ever want to talk about his shame? So what happens to his shame when she comes to talk about it? It gets worse and he withdraws. What happens to her fear when she comes to talk to him about it and he won't talk about it? Her fear gets worse. And you take the two people that are positioned better than anyone else to help each other through this difficult time, and because of their lack of understanding of the needs of the other, they go in opposite directions, and the gap between them gets wider and the circumstance gets more difficult. Financial management does not need to be like that, whether it's private or business. It starts with tactic 1 and shift. Get real and get right. Before you attach any meaning to the expenses you've made, let's figure out what those expenditures are. Let's get a few basic things in order so that we actually can analyze where the business comes from, or what our finances really are telling us. There are 3 important documents that we're going to use in order to do that. The first is the one that we talk about more than anything else. It's the P&L. It's the profit and loss. It's what allows us to go and look at the month and say, well, how did it turn out? Did we win? It's very important. It's very important. I always, for coaching clients, I always want to see the P&L for the month before and year to date. You can have one month that was really great and year to date that's not trending great. So I always want to see all those. However, for the P&L tells us about the past. The P&L is the past. The budget is what we use to tell the future what it's going to do. John Maxwell has this great quote. He talks about how a budget is when we tell our money what to do rather than our money telling us what we can't do. So when we sit down and we go through the physical discipline of creating a budget, that is when we say in advance, this is what we're going to do this month. Now things come up, they always do, right? So we've got something that accounts for the past and something that accounts for the future. The way that we are able to account for the now, for the today, is the balance sheet. Some call this the cash flow sheet. This is whatever process you've got that allows you to go into your budget and say, this is how much I've got left in this category. You know, it's only the 14th of the month, and we've spent $800 of our $1,000 for family food. But there's 6 of us. We eat like pigs. We've spent that. So we got a lot of month left ahead. So what this conversation does, and using some process for being able to figure out where are we against where we said we'd be, this allows, like for example, my wife and I, Teresa, to say, well, where are we going to take it from? We can't just make up money. We're not the government. We need to go to our other categories and say, you know, this month we're not going to buy additional clothes, or this month let's get creative on our date night. We're going to take that money and put it into our family groceries. This changes the way you talk about money, because you can come up with strategies and solutions without indicting one another. It's important. Now, if this has been hard for you and you're not in MAPS coaching, click on the link in the first comment, answer some questions, and we'll reach out to you. At MAPS, we talk about this stuff. We go through the P&L. We look at the budget and we question the return on investment for expenses. We want to work with you through all of these things. You don't have to do this by yourself. There's a theme to my videos, right? Click on the link in the comments below and just fill it out. If you're working with a coach and you guys haven't started on this, you be the catalyst that gets that started. You go to your coach and say, this is what I want to work on. So once we're using these tools, there are some areas that when I'm analyzing the profit and loss for a bigger business, there's some areas that have a tendency to grab my focus. In fact, there are 4 things that I think create chaos in your financial world. I've written them right here. The number 1 is we overpay on salaries. But I love my people. She's been with me since the beginning. She's so good. She's so good. Well, what makes her good? Well, she's never late on a transaction. And she can always tell me what's going on with our files. So she's a really good transaction manager. Yeah. Well, you're paying her $85,000 a year for a position that industry standard would be $40,000. See, my job at least is to question, at least to help you understand what you're spending on so that you're able to make the right decisions. Now, in the scenario I just gave, it's not that we're not going to overpay people. I do subscribe to the philosophy of I want to pay great talent greatly so that they grow and push. I expect a lot from them. They have a lot of accountability and they have no room for excuses, victim behavior, entitlement. Give me those people and I will pay them more to work in my organization. That said, at least I want to know what the numbers are, so I'm making that decision consciously. I'm not going back and realizing, gosh, I spent more than I should have. Really important. So I see people get really out of whack with salaries. Now, I'm not going to name any names, but I did a coaching call today where we looked at the total income for the month. It was somewhere around $220,000. That's awesome, right? $220,000 income for the month. The budgeted amount was $330,000 for this month. They missed their revenue goal by like $110,000. What we learned is that their salaries are 18.5% of their total revenue. Our model, Gary's model, the millionaire real estate budget model, millionaire real estate agent budget model is 12%. Well, it was interesting, we went back and we plugged in, well, what if we'd hit our revenue goal? If we'd hit the revenue goal, then our salaries would have been at 12.5%. That worked. These guys are great. They're planners. They understand that. The other disturbing thing that we discovered was in the second area that I see people fall into trouble in, and it's lead generation costs. A lot of us will pay marketing costs and we'll pay for online lead sources. We'll do all these things, but we don't hold it accountable. Now, in the case of the company I was just talking about, what we learned is they spent year to date 28% of their marketing budget. Do you see the challenge? That is not where we want to cut. We've set a goal to create so much revenue, and to do that, we've said these are the marketing areas and the sources we're going to use, and now we're behind in our revenue goal, and shocker, we're not spending the money that we put aside to generate this business, right? They don't do that. The other area that I see is that people, they buy online lead sources and then they lack the follow-up. They lack the structure. They let the team tell them, we don't want to do that. We don't want to call back. We don't want to lead gen in the morning. We're not going to do that because we're busy and we weren't hired that way. This just gets my gag reflex on hyperdrive. Because you as the business owner, that's a fixed cost. You're writing checks. This is the economics of the crazy that I spoke of a week ago. You're writing checks based on the delivery of 100% of your revenue goal. And when you're not delivering 100% of your revenue goal, that means that you are now consciously allowing your business to erode its profits. When the profits are gone, you start running your business on debt. How do we avoid this? Well, first of all, we go through this every month. We identify, we have the conversation. There's two more areas that I see that people get in trouble. Number one, they get really confused with what they put above the line and below the line. I don't want to spend a ton of time here. However, just a couple of general guidelines. If in your profit and loss statement, you've put a whole bunch of personal stuff because your accountant says you can write all that off, you can write off all your family vacations, because if you stay in a resort center and it's real estate and you talk to someone about real estate, you can write it all off. I'm going to leave that to you to determine your risk factor. However, if you're putting those things up inside the profit and loss, I want you to extract those out and put them below the line. And what does below the line look like? Check this out. It's really sophisticated. I've got a section that breaks down my income, a section that breaks down my cost of sales, a section that breaks down my operating expense, then a section that shows me my net profit. And then there's a line, and below that line, I'm going to put all my personal expenses. And below that, I will have a net profit. Think of it like this. If you were selling your business, would someone look at those expenses and say, I consider those valuable to the business and I'll pay for them. I'll pay for their car and I'll pay for their shoe budget. And if the answer is no, it doesn't change your tax strategy. We just want to see it differently on your P&L. We want you to be able at a glance to be able to determine, are you fiscally healthy? And then number 4, this is the biggest challenge I see that people run into with their finances. They do not have a process to close the month. Now listen, when are we going to wake up and look around and realize that we have the best business model right in front of us? It's the market centers. And what do they do every month? They transmit every single month. So my challenge to you is to make sure that with your coach or just with your team or with your spouse or whatever you're doing, have a formalized process that allows you to close your books every month. Go back into the month and balance the budget. We said we'd spend this much on this category, and this is what we really spent. Then make your new budget for the next month. Make any adjustments you need for the next month. And then run at it again. Now, somebody infinitely wiser than me once taught me that you cannot out-revenue a business that is failing on money management. You just can't. Because we will take whatever habits are creating the deficit in our desired financial outcome, and those will just get bigger and bigger. They'll grow with the scale of the revenue. Now, a lot of us, we can go out and kick the bushes and make a lot of things fall. And we get used to that, right? If I just make more money, if I just bring in more business, I'm going to be just fine. And for me, that's the equivalent of hopping in your car, jumping on the freeway, and driving backwards. Well, I would never do that. You're doing that right now. You're doing that right now when you're spending money and you don't know what it's doing. You don't know what effect it's having. You want to have a real humbling experience? Wake up one day and not be able to make payroll. If you've ever had that experience as a leader, it is the most anxiety-induced experience you can have. Wake up and not be able to make payroll. You're driving backwards. My challenge to you is quit driving backwards. Stop it. Know the big four numbers. Use a profit and loss, a budget, and a balance sheet, and make sure that you're accounting for your salaries and for your lead gen costs accurately. Like, it's time to get started on these things. I want to challenge you to lean into the language. Make sure that you're having conversations with people that are connected to your finances that will help drive the type of financial understanding and habits that you want. If you're an agent and you're watching this and finances aren't your strength, then why don't you volunteer to be on the ALC, the finance committee for the ALC? If you're a coach and you're watching this, then ask for the profit and loss statement of everyone you're coaching and read them all of them before you start coaching in a week. Just imagine if you read 30 profit and loss statements. Do you think you'd learn something? What if you took enough time to actually extract the total cost of sale and the total operating expense and subtract those from total income and figure out what percentage of their revenue each of these categories were? Do you think you'd learn something? See, knowledge is power when it causes us to ask the right questions. And these are the areas that we need to understand if we're going to ask the right financial questions. And lastly, what happens if you get started and you stop? Now, I know none of you would ever do this, but I've done this before. What happens if you start and you stop? Start again. Start again. You know, I have this amazing habit with fitness where I get really focused and I start, and then life happens and I get pulled off of it. And I start again. I never get truly out of shape because I'm starting with enough frequency. It'd be amazing if I never stopped. However, I just figure as long as I keep starting, as long as I know what my reset is, as long as I can go back and without too much emotional and mental heavy lifting, I can get started again. That's what we're talking about here. So my challenge is, if finances are not a strength for you, you make them a strength. Lean into the challenge of understanding what all these things mean. Work with a MAPS coach that can walk you through this process every single month. And again, if you don't have a MAPS coach right now, if you are being held hostage by the lack of structure, the lack of understanding of your financial world, click on the link in the comments below and fill out those questions. Answer a few questions. We'll reach out to you and let us get you aligned with a great MAPS coach that's going to help you turn this into a strength. Once people truly understand this, once this becomes a strength in your life, oh snap. The sky is the limit. This is the kind of thing that'll bring you closer to your spouse when you're on the same page. This is the kind of thing that'll make planning for next year more and more exciting. Financial management. We have 4 models, and today I've talked to you about 25% of them. So from me to you, love, peace, and chicken grease.